What's up, everybody? Crypto Noah back with another yield farming video. In this video, we're going to be covering another platform that allows you to deploy different yield farming strategies, bullish, bearish, delta neutral, with the click of one button on the Base network, and that project is Arcadia Finance. We're going to go through the docs, we're going to go through their social media, we're going to go through their strategies, we're going to go through literally everything we can find on them, and at the end, per usual, I'm going to tell you guys if I would use the Arcadia platform or not and why. So before we get into it, I do have to say none of this is financial advice. These are my own perspectives, my own research, and my own opinions, and they should be treated as such. So without further ado, let's jump straight into the content, starting off with the docs. All right, so here we are on the docs, and right here it says, Arcadia Finance is a set of decentralized protocols with different entities contributing to its development and adoption. So they go to talk about the Arcadia Protocol, which is a set of decentralized non-custodial protocols built to serve as a novel standardized infrastructure for managing collateralized positions on blockchain. Then you have the product, which is the web interface facilitating interaction with the Arcadia Protocol. This interface is the first user-facing product built on top of the Arcadia Protocol, often referred to as the product. And then Pragma Labs is the research company that developed the protocol, the product, and is developing other tools on top of the protocol. And it says the protocol is a set of smart contracts implemented for the Ethereum virtual machine that facilitate non-trusting parties to close financial contracts without the need for intermediaries. It combines lending and margin accounts in the same protocol to enable the creation of credit markets on-chain. Anyone can build on top of the Arcadia protocol. Then they go on to talk about the product, which is a web app built on top of the protocol, and it's a decentralized app that provides yield enhancement and yield optimization solutions on the most popular DeFi protocols. It works like a robo-advisor. A robo-advisor is kind of like Yearn Finance, where you deposit your, let's say, Chainlink in there, and it'll find the best ways to get yield on Chainlink in DeFi for users looking to consistently generate the highest returns for their crypto assets. Let's go on to talk about how it works. So Arcadia has two sides to it. They have lenders and strategy users. So lenders generate passive income without selling their assets. They provide wrapped ETH or USDC and receive a yield-bearing token that accrues protocol fees in the form of interest paid by borrowers and a portion of liquidation fees. Arcadia does not take a cut of the interest and instead passes all of the rewards to the lenders. Lenders' assets are used by borrowers as leverage for financial positions. So this is kind of like an Aave or a compound where you supply assets, they pay you a yield, and people borrow the assets you supply, and that's how you get the yield. And then they charge a little more than they're paying you, and that's how the company makes money. But they're saying they pass it all on to the user. So we'll get into the other ways on how the platform makes money, which is important because you want to know the fees you're paying. So then they go to talk about strategy users. They participate in yield strategies and boost their financial positions by borrowing liquidity from lenders. They interact with lenders and with other third-party protocols using Arcadia accounts. So at its core, users want yield and protocols want liquidity. Arcadia provides users with more yield and protocols with more liquidity. They're able to do this by connecting the two sides, lenders and yield seekers, using a novel primitive called an account. So let's dive into what is an account. So it's simply a user-owned and isolated smart contract that holds user collateral and borrowed funds and is able to act like a wallet. That is, an account can execute logic, swap, borrow, stake, withdraw, and repay. Users are able to use their account to interact with third-party protocols just like they would their normal wallet, with the difference that the assets within an account can be used even when they serve as collateral to back debt. In other words, you can turn X into a position worth more than X by using Arcadia. Contrast with how most protocols work today, you can deposit collateral and it remains stuck in a contract, making it unavailable to use anywhere else. Users end up with less liquidity to work with because a portion of the asset value must remain locked as collateral. Further, while most protocols pull user assets into the same vault smart contract, Arcadia provides each individual user with its own isolated smart contract. This means that Arcadia users are no longer limited to generic configurations by a vault manager and thus have unmatched flexibility to deploy their capital across the ecosystem in the most personalized way. So guys, just to break this down, let me give you an analogy. Let's say you go to deposit some funds on Aave and you supply funds there and then you're getting a yield, people are borrowing your funds. Well, as long as those funds are locked on Aave, you can't do anything with them, right? But this protocol is saying that it's kind of like depositing on Aave, and instead of everything being in one smart contract pulled together where people can lend from that one pool, you imagine if you can deposit on Aave and your deposit is like its own smart contract, and you can take it off of the platform and use it for collateral elsewhere or use it to get a yield elsewhere. Kind of like on Uniswap V2, when you, let's say, enter into an ETH USDC pool, you get an LP token. V3 doesn't do this because each position is an NFT, but you on V2 you get an LP token, and then you can take that LP token, which is your receipt to get your liquidity back, so you don't want to fuck it off or lose it, but you can take that LP token and stake it on another dApp to get a double yield. So you're getting a yield from the LP token because you entered into a liquidity pool, and now you stake it somewhere and you're getting another yield. That's kind of like what this project is doing with multiple strategies and across multiple platforms. We're going to dive deeper. Let's get back into the docs. So here they have the frequently asked questions section where you can, go and get answers to the most common questions. They talk about gas fees, strategies, the fees, and everything like that. So now let's talk about the product here. It says Arcadia built an intent-centric application where users can deposit their assets into sophisticated strategies that beat staking APRs and will dynamically suggest rebalancing actions to the highest yielding opportunities available according to each individual's preferences and constraints. Arcadia takes advantage of the composability of DeFi to combine different protocols and interesting ways to maximize yields while providing best-in-class execution that streamline the way users interface with underlying protocols. It says here they're built upon two guiding principles. One, users do not want to manage their collateral. Rather, they want to optimize their collateral to achieve specific objectives, i.e. increase yield, delta hedging, diversify exposure to different protocols, etc. And then it says every DeFi user is unique with different risk profiles and investment objectives. All right, so now they go on to say why Arcadia. Now, it could be because I'm an advanced farmer, but this has a little bit of fluff to it. But nonetheless, I do think Arcadia is a great product. So they say DeFi has came a long way since DeFi summer, yet the ways to earn yield on chain have not changed. Today, finding, accessing, and managing yield is a complex and manual process. Not necessarily. Browsing, analyzing, swapping, depositing, borrowing, staking, claiming, and withdrawing are steps often isolated from each other and performed manually over multiple UIs. Now, this is the part I kind of disagree with. We talk about Uniswap V3 all the time and using Aperture to set up different triggers that will rebalance for you. And they're still shipping. They're working on a perpetual rebalancing feature that'll allow you to continually rebalance without having to do anything manually. So I'm not sure when this was written. Maybe when this was written, this was more true. But DeFi has definitely came a long way, and it's a lot of things that we talk about on this channel that makes it easier to manage your liquidity. I digress here. All right, now let's go to talk about strategies. So it says traders, farmers, and AMM LPs use Arcadia to build and execute yield strategies. Unlike other yield products, Arcadia lets you construct and combine multiple different yield strategies in a single position with a single transaction. That is, users can open up a single position and deposit assets into different pools and farms simultaneously, stacking multiple layers of yield from multiple protocols together in one position. For example, users could deposit ETH as collateral in their account and borrow additional ETH to engage in leverage staking to earn staking rewards. Simultaneously, they can provide liquidity in a Wrapped ETH RETH and Wrapped ETH CBETH pair on Uniswap V3, capturing additional trading fees on top of the staking fees. The different on-chain action to build such a position, deposit, borrow, stake, mint uni V3 positions, would be executed in a single transaction and from a single collateral account. This approach is akin to flash loans on steroids, but without the necessity of building a custom smart contract for each strategy. So let's go over an overview here. So they kind of give you a set of strategies that is available on their platform that happens automatically. So if you're looking for a delta neutral USDC yield or bearish ETH USDC yield, delta neutral ETH yield, or a bullish ETH yield, they give the description, the assets you would deposit, the asset you would borrow, the assets you would get a yield on, the APY performance, underlying protocol integration, so all the protocols that would be used inside of the strategy, and then the risk. And, one thing I have to say about Arcadia, they give great documentation on how to use it, because if it wasn't for this documentation, unless you're an advanced farmer, people wouldn't be able to use this, even though it is one click of a button, because the confused mind says no. So they do make it easy. So they go on to talk about how to get a delta neutral ETH yield, a bullish ETH yield, earn yields on stables, delta neutral or bearish. Delta neutral is basically you borrow money and then you long and short at the same time, so that if your long is in the green, your short's in the red, or if your short's in the green, your long is in the red. So that way the principal isn't changing, but the liquidity that you're farming with, the APY, is your profit, right? It's almost like single side staking a stable coin and getting a yield, assuming the stable coin stays at $1. They also have a how-to guide on how to enter into all of these strategies, where they walk you through step by step what to do from connecting the wallet to entering the position. And then they offer the same thing for lenders. They go on to talk about how it's similar to Aave, like we just talked about. And then they tell you where the yield comes from. They have a how-to guide for how to enter into a lending position as well, which is, pretty self-explanatory. So I'm happy with that. All right, so now let's go into their security and risk. When you're trusting another platform with your funds or another smart contract, you want to make sure everything is safe. So they do have multiple audits that I've went through, and the audits do look pretty clean. It says a lot when a project gets multiple audits, because these things aren't cheap, right? They're not cheap. So this tells me that, they want this project to succeed and they're serious. And if you look here, you see that the high severity things have been fixed. Looks like they have one more to fix here, but they acknowledge the other one, and then most of the low ones were fixed as well. And this is their most recent audit. So when you're looking at audits, you want to look at what came back dirty and did they fix it? That's the most important thing. And they have a few audits. They Trust Security, Sherlock, Renaissance, Pashoff. I'm not sure what some of these firms are, and this is taking a while to load, but I've already went through them. I'll let you guys kind of go through these. I'm try to keep this video as short as possible. They use Hexagate to monitor real time if there's any hacks or, malicious actions happening. And this is the same thing that we covered with XtraFi. They essentially have people watching the protocol at all times to protect from phishing, fraud, scams, and hacks. And it seems like a lot more companies are going towards this policy as well, instead of just waiting on a hack to happen or, taking preventative maintenance and getting an audit to prevent something from happening. It's good to have someone watching in real time, so that if something happens, you can catch it as fast as possible or catch it before it happens. They are insured by Sherlock for up to $2 million, and Arcadia bears the cost for their insurance. And then for users who want to take out individual insurance through Sherlock, they're also able to do so. And they're going to provide a how-to guide on how to do that pretty soon. So that's cool that they offer insurance, because you never know. All the risk and precautions that they're taking, there's still projects that get hacked by the millions, even though they have multiple audits. So we are still in the dial-up stage of the blockchain. And then if you hit contracts, they give you the contract addresses to pretty much all of the addresses that are affiliated with the project. All right, so now that we know what Arcadia is, let's do a platform walkthrough, look at some of the yields and look at some of the strategies. And like I said, if you stick around to the end, I'll tell you guys if I would use this platform or not and why. All right, so here we are at Arcadia.finance, and this is built on Base. We already talked about how it works, one-click transactions to start earning yields with multiple strategies. So I want to earn a yield and feel great. I want to be neutral, bullish, or bearish, and that'll kind of determine what you see here. Why to invest, we kind of already went through that. Audits, and I wanted to look at some of their backers before we dive into their strategy. So Coinbase Ventures, Owl Ventures, I'm not sure what the other ones are, but if they are backed by Coinbase Ventures, that says a lot. And if we look at their socials, 2,000 members on Discord, not too bad, but not crazy. Look at their Twitter, 3,900 followers, but they've joined, December 2021. And if we scroll through here, they get a lot of likes, but not a crazy amount of interaction. But hey, that's okay. All right, coming back up here, let's look at the strategy. Starting off with lending. So if I just wanted to supply and get a yield, I can supply USDC or wrapped ETH and get an 8.6% yield or a 12.7% yield plus rewards, right? And if we click on the USDC, it shows you the TVL in this particular pool. So 861K, 49% of it is being utilized. So I take that to mean 49% of this is lent out. And that's good that 100% of it isn't, because if you supply USDC on here or ETH or whatever asset, and 100% of it is lent out, that means your funds aren't liquid and you can't withdraw. So it's a good and a bad thing that's not fully utilized. It could say that people just aren't fucking with the platform, but the other side of that is you are liquid. So the sweet spot is that you want a high TVL with not 100% utilization so that you know it's trusted, but also you want to have security that you can pull out your funds at any time, right? And they go on to talk about the risk, exposure, insurance, and kind of most of the things that we talked about on the docs. And if we hit protocols, it tells you which protocols that they're using this strategy for. If we hit strategies, let's say you want to do a delta neutral ETH. It talks about the assets that go into this strategy, the distribution. And if you want to open the strategy, you just click it, you have to connect your wallet, and then you can literally deposit ETH instead of having doing all this yourself. And then you get that yield that is shown here, right? And it says that it's 1x leverage. I'm not sure if that's no leverage. Sounds like it. I'm not sure. So if you want to feel great, these are all the delta neutral pools. So let's say you're bullish on ETH. You can do this pool. This one does have leverage, 4.6% leverage. So USDC is borrowed. And they go on to talk about how to do it. You can even click demo. You can determine what leverage you want. So if you don't want any leverage, you can do that. But it is going to affect your value. So yeah, this is pretty cool. I wonder what the TVL is in this pool here. It doesn't say the TVL. And if we click details, let's see here. Yeah, it doesn't say how many people is using it. It just gives you the overview of the strategies, the risk, target users, etc. So that's not bad, 679%, but you have to keep in mind that's because you have leverage. And then if we look at their bear ETH pool, they're borrowing ETH and selling it and farming with USDC. And yeah, we were kind of doing that on Radiant Capital in the bear market. And I talked about doing that a lot. And they give you all of the details on that as well. So yeah, this is pretty cool. Let's see, you click the advance, see what pops up here. So you got Aerodrome, Slipstream, 186% APY, 107, 99, 88. So yeah, this is definitely for an advanced user because I haven't even looked into Slipstream. I'm not sure what it is. Maybe that'll be the next video. But yeah, you guys should definitely check this out. And if we click leaderboard here, I don't know if this goes by who's made the highest yield versus the lowest risk or what, but it gives you the wallet address. And sometimes it's not a bad idea to copy a wallet address, pull it up on DBank and see what they're doing and maybe see if you can learn from them. I wouldn't just say copy and paste their strategy, but you know, my grandma used to always say you can learn something from a fool. All right, guys. So with that, we just went through the platform walkthrough, went through the docs. Would I use this platform or not, and why? I would, but just like XtraFi, I would use it for the lending, just to single side staking to get a yield. Because as you guys see on my video, I get pretty good yields better than this, to be honest with you, without using leverage, using Arcadia Finance, just using Uniswap v3, setting a range that's pretty appropriate to where, like my Maple ETH pool hasn't went out of range. I haven't had to touch it once. It went out of range once, but it went back in, and it's literally been printing money, and I ROI'd in that pool in a month and a week. So if I wasn't as an advanced farmer and I didn't maybe have enough time and I had like a job and I just wanted to do something that was a little more passive and I wanted to enter into a delta neutral or a bullish ETH and I didn't want to have to learn how to do all that looping and borrowing and staking and keeping track of the loan to value, making sure I'm not getting liquidated and all that stuff, then yes, I would use this platform. So I like the fact that they have 4 or 5 audits. I like that they make it pretty simple to use. I like that it's one click. And guys, I just forgot. We did not go over how this platform makes money. So let's get right back into that real quick. I thought they were going to dive into it somewhere else. I could have swore they did, but let's just go back here. So it says, the Arcadia protocol itself does not charge any fees. However, there are a number of fees paid by strategy users directly to the lenders. These include a 7% liquidation fee, a portion of which goes to the actor initiating liquidation, the actor that ends liquidation, and the leftover majority goes directly to lenders, and an interest rate fee paid by strategy users to lenders. In both instances, the fees are paid directly to lenders, not to Arcadia. Swapping assets within the account includes a swap fee of 1%. So it looks like they're doing the standard Silicon Valley model where they're kicking profits down the road and they're just trying to get as many users as they can. And they can do that because they've raised so much VC capital. So they don't really have to focus on profits because they have a war chest where they can just build and pay people. All right. So before I conclude this video, guys, if you want to learn how to find the best yields in DeFi, with the best group in DeFi, with the best coaches in DeFi, with the best course in DeFi, with the best DeFi toolings, click the link in the description, book a free strategy session. You'll talk to me and one of our coaches. We teach you how to run your portfolio like a TradFi market maker, and they've been running profitable strategies that we don't know about since the 19th century. So if that sounds interesting to you, we love to talk to you. We love to answer any questions you may have on crypto and yield farming. And if not, keep enjoying the free content that I'm going to keep putting out on this channel. But with that, thank you guys so much for tuning in. If you got value, I ask you to consider subscribing, drop a like, drop a comment, share with a friend. But other than that, I thank you guys so much for tuning in. I love every single one of you watching, and I'll see you in the next video. Take care and trade safe.